Palantir reported its results for Q1 before market open this morning. The results can be summed up in one word. Not bad, not great.
Good.
Let me know if you get the reference. First, we'll take a look at how the stock did this morning in reaction to the results. Then, I'll break down and pull apart my favorite parts from the official slide deck. Let's go. The stock was just under $20 when I published my last video on Saturday. Yesterday, PLTR plunged below $19 per share, and this morning it fell through the $18 and $17 levels before the conference call. I got a small buy order through in the pre-market at $16.50. That was good timing, I guess, because that drop turned out to be a head fake, and the stock bounced off those lows and started rallying this morning, getting all the way back above $20 intraday. That's a 21% swing. Crazy volatility. We'll have to see what happens going forward, and I'll be covering this report extensively this week, so I'll provide stock updates with my thoughts along the way. Personally, I think this jump today is a sigh of relief since Palantir did deliver a strong quarter even in this treacherous macro environment. Today, I've selected a number of slides from the official report to look through. This isn't going to cover everything, and I'll be back with thoughts on the conference call and answers to investor questions tomorrow. But here we are for Palantir's Q1 2021 business update. Q1 was a record-breaking quarter, and I love how they highlight how PLTR is held by 1.5 million individual shareholders. I think it's great that they're putting individual investors at the forefront. I'll get to more on that tomorrow with the conference call breakdown, but it seems they really do care about the retailers and not just about Wall Street, and especially not about short-term minded institutional investors. So getting started, Palantir generated $151 million in adjusted free cash flow. So keeping in mind that is an adjusted number. You will see on the right here that incredible increase year over year from Q1 2020 to Q1 2021. And really all I care about in a quarterly release is progress. And this absolutely demonstrates progress from Palantir. If a company can stack up year over year and quarter over quarter growth, no matter how small it may seem, consistently over time, that growth will compound and become something really meaningful over a number of years. Revenue grew by 49% year over year for a total of $341 million across government and commercial segments. So that 49% revenue year over year growth is actually a little below what I was predicting. I was looking for $355 million in revenue. It appears I was a little too bullish there, but not that far off. They are delivering strong growth regardless. I think they could have done a little better, but I'll get to that in just a moment. Commercial deal value adjusted for duration grew by 76% year over year, and total US revenue, and keep in mind this is just US revenue, grew by 81% year over year. So very strong growth domestically. And I thought it was interesting how they chose to include this because I haven't actually heard that much about it from Palantir themselves. Talking more about Edge AI and Apollo, saying that the US government can, with Apollo, operationalize AI at scale to upgrade software, sensors, and effect chains. So this is not a financial metric by any means, but if Palantir is making it a focus of the earnings report, then there's definitely something to it. And they say the same innovations apply to the commercial sector, and they list some of that as well. So in Q1, total US revenues grew by 81% year over year, and commercial opportunities in the US and the UK have increased by 2.5 times since February. In the same period, active commercial pilots have more than doubled, so Palantir's entire business is growing. It's all happening at different rates, but it is growing, and that's not something you can always take for granted. And I do think the commercial pilots is something important to key in on, because while the pilots themselves may not eventually turn into a large contract of any kind, they do signify the potential for higher revenue from a given program and organization. So it's great to see that the number of commercial pilots has indeed doubled. They're highlighting again how their platforms serve as the modern operating system for the enterprise. But I do love how they said including companies of all sizes and at all stages, because I think the more they can embrace and scale to smaller and medium-sized companies, the more they will go mainstream with their offering. So I think this may have flown under the radar, but including that is very bullish. And then touching on the SPACs, I'll get to more on this tomorrow, but Lilium will use Foundry for design, engineering, procurement, testing, production, quality, logistics, and in-service operations. So there it is. Palantir is investing in them partly because they are using their own software, and this kind of closes the loop on the question as to why Palantir would make such an investment. My question in particular. But I think it's great that Lilium will be using Foundry for pretty much all of these verticals. And same thing for Sarcos, another one of Palantir's investments. They'll be using Foundry for industrials and manufacturing. And we have actually heard more about this from Palantir's DoubleClick series already. And they're infusing Apollo for Edge AI into their exoskeletons. Shout out to Elon Musk and Tesla with the Cybertruck exoskeleton. And another mention of Apollo for Edge AI, so kind of tying it back. They say they're investing deeply in Western innovation, and I believe it. And I think this is a really underrated part of Palantir. They're not a traditional company. They're not going to abide by the traditional rules. They're going to make unconventional moves, like investing in SPACs, but they're going to do so with an end goal in mind, one which Sankar reiterated today, which is to become the most important software company in the world, eventually, over time. And that doesn't come without taking risks and bold actions. It comes from a vision, and it comes from a deep investment in time, resources, and intellect. They continue on by talking about how the government business continues to grow quickly, and in Q1, government revenue grew by 76%, fueled largely by 83% growth in the US government business. So upper double-digit, nearly triple-digit growth is just awesome to see no matter what it is. And I think, as I've said before, the government business is not even close to its ultimate potential. So while some investors might just point to the commercial sector for growth, I think both have a long way to go. And in Q1 alone, they say they hired nearly 50 new salespeople. I couldn't help but laugh a little bit about this. What does nearly 50 new salespeople mean? Does it mean 49? Does it mean 48? And regardless, I don't think that's an outlandish number. So it's good to see they are actually hiring salespeople, but I'm not entirely sure if 50 is as big a number as they think it is. Regardless, any number of salespeople should help them considerably, and I have one more point to add to that in just a little bit. They say their channel partnerships continue to accelerate, and this is where IBM, the partnership with them, comes into play. If you'll see under independent software vendors, IBM booked first customer within 16 days of the product's general availability. So it appears the partnership is working out. Now it looks like it did take 16 days before they could entice a client, but I'm not sure if we should read too much into that. Basically, they're just coming out and saying that the product is generally available now, and that channel partnership specifically should continue to accelerate. And also, they're enabling channel partners to go to market with battle-tested software platforms. And they say instead of false promises. So in year 1, it's discussions. Year 2, architecture design. Year 3 plus, custom development. And year whatever, a promise of production. That is what you get without using Palantir. But with their platforms, day 1, it's onboarding. And just after that, day 2 and on, it's operational use in production. It's that fast. It's that straightforward. Talking more about Palantir Unlock. I've spoken about it before, so the only part I was interested in was that they said at no cost to Western companies that are core to the economy, employ large numbers of people, and crucial to the restart. So I think it's good that they're focusing on these 3 important parts of a business if they are indeed going to give away their software. Now on to the financial update, and some of this I already covered. I just want to touch on it quickly again. That 49% growth year over year for revenue, and then the $117 million in adjusted operating income and $151 million in adjusted free cash flow. And it is worth pointing out that that 49% is actually ahead of their prior guidance of 45%. And if you take the Q1 revenue from US customers and multiply it by 4, you get $800 million, which is the annualized revenue run rate from US customers. They say our government business generated $208 million in revenue in Q1 2021, which is up 76% year over year, with again 83% growth from US government customers. And the commercial business generated $133 million in revenue in Q1 2021, up 19% year over year, with 72% growth from US commercial customers. So the commercial business was only up 19% globally. Again, I'll get to that commercial business, the commercial growth, in just a couple more slides. But they ended Q1 with $2.8 billion million in total remaining deal value, which is up 40% year over year, and that comes with the territory. The more deals they have, the more they will have in total deal value. But I do like these statistics. They've got a great number of deals worth $5 million or more, some worth $10 million or more, and the average contract duration 3.7 years. The average contract duration of commercial customers is actually longer, 4.6 years. And this is the slide I keep talking about. They only added 11 new commercial customers. I'll circle back on that, but first, the revenue per customer did grow 29%, and the average revenue per top 20 customers grew 34%. But again, only 11 new commercial customers. That to me is a little bit of a letdown. We know they're increasing their sales force, but it feels to me anecdotally that they should have added more than 11 new commercial customers. Palantir's financials are set up such that they do rely heavily in their entire business on these contracts. So the more new clients it can add, the less they depend on top clients, the less they're at risk, albeit a small risk, of those top contracts falling through, and the more they can increase their top line overall. So I think it is a necessity that they get more than 11 new commercial customers per quarter. I would hope that their marketing would be doing better than this. I would hope that DoubleClick and Demo Day was getting the word out enough. And maybe you think I'm being harsh on Palantir. 11 new commercial customers. Of course, that is great news. It just needs to be much higher. I'll have to keep a watch on this number going forward. And just a few more financial related slides here. Adjusted gross margin grew to 83% and contribution margin grew to 60%. And again, they beat guidance. Adjusted operating margin of 34% ahead of prior guidance of 23%. So again, they're showing that they are usually conservative when it comes to giving guidance, which is a good thing. So looking ahead for Q2, they're expecting revenue growth of 43% or $360 million and an adjusted operating margin of 23%. I do expect them to beat these numbers, given how they like to sandbag them. For the full year of 2021, the only thing they're updating is that they're raising adjusted free cash flow guidance from break-even to in excess of $150 million. And long-term revenue growth of 30% plus for this year and the next 4 years. Now, this is a little bit of a point where some people get upset at how low this number is. And given that I believe Palantir is being conservative on this number, still putting out 30%, they should be guiding for higher. But I do appreciate how they aren't out here aiming for growth that isn't possible or growth that they will fall short of. They're saying this is what we believe we can do. We're going to exceed it. And I think they will certainly update this figure if there's any material effect from a sector or interest in one of its platforms. And finally, I'll close by bringing your attention to stock-based compensation, which did yet again drag down financials for this quarter. Came in at nearly $194 million, above my hopes for it. So this is something that Palantir really is going to struggle with if they can't get it down over time. Of course, it's not the end of the world, and I do think it's a worthwhile expense. It's just an accounting game, in my eyes. But it would be helpful to see that number go down over time, but I'm not sure we can expect it to decrease too much. So Palantir's core business is going to need to increase to support that financial expense. But anyways, this is a good, solid report. A little mixed, but overall a strong quarter from Palantir. And just to show you, these were my expectations, and this is how they came in. My expectations, how Palantir actually delivered. So they did miss to the downside some of my figures, but again, I am a bull. Overall, a great quarter from them with some negatives. So a lot more content is coming, and I'd love to hear your thoughts on the quarter. And what do you think about the stock? Until next time.